Has the market officially broken out, or is this just a bit of a technical breakout? Let's talk about it. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap. If you haven't met me before, my name is Chris. I'm with Riz International, and we are a group of traders who are looking to grow and increase our profits in the market. And we do these weekly recaps to kind of give you an idea of what's going on in the market and what we're seeing and where we expect things to go. So this week, it has been a bit of a surprise, to be honest with you. We had the recent CPI print last week. Market didn't react as we expected, And if you recall, last week I was telling you, it's like we need to break through 3,900 fairly decisively, and that's exactly what we did on Tuesday. Monday was a bit of a non-starter. Looked like we were going to gap up and push over 3,900, but we kind of got there and then rejected hard. But Tuesday, the buying power came in and pushed this thing up and up. And we pushed over the 50 moving average, held over it, closed over it in a massive green day in the market. And, Wednesday, Thursday, and Friday, we made this push up to 4,000, but Friday was the most interesting day of all. It really looked early on like we were going to push and hold over 4,000, but a massive rejection of the 4,000 level here on the S&P 500. So it's going to be interesting going into Monday to kind of see whether this was an actual breakout or if there's something else going on, because there were no major financial news. There was no catalyst large enough, in our opinion, to really push the market this high other than potentially just a technical breakout. Now, that being said, we are still in a downtrend on the S&P 500. Even though this is a slight break in trend, we are, making higher lows at this point. We still haven't broken through this line yet, which is currently the downtrend line. So we've got a long way to go before we get to the point where we can say, yeah, the market is in full recovery. Now, don't forget that later this month, we are going to get the next GDP print. And if that happens to be negative, then guess what? We will officially be, or I say we, the United States market will officially be in a recession, the big R word. Right now, we're still just, in a bear market, but that looming threat of a recession is definitely something that is weighing heavily on everyone's mind. Now, the question is, how bad will it be? If the GDP print is not that bad, is it one of those situations where the market will be like, well, yeah, we're in a recession, but it's just a minor recession. It's not that bad. So that's a big question going into this GDP print that we're going to be keeping an eye on. But earnings season is in full swing now. And it could also be that, we're pushing up on anticipation of good earnings. That is one possibility for why we're seeing this push in the market. But really, there is no catalyst that we can detect or that we have found that would really be indicative of a run-up like this. So we're being very, very cautious with this right now. We did take one trade that we'll talk about here a little bit later, but just be very, very cautious with this push up to 3,900 or 4,000, and that hard rejection of 4,000 on Friday was very interesting to see, to say the least. So we're going to be keeping an eye on this. We recommend that you do the same, because these next couple weeks could be very, very tricky to trade as we're getting mixed signals, is really what I'm trying to say. Technically, we're still in a downtrend, but also we're starting to make higher lows, which is indicative of things starting to turn around. So it's a big question where we go from here. If anybody tells you they know where it is, well, they're just straight up lying to your face. But because it could go any direction. There could be a news catalyst, something happens, in the conflict in the East, something happens between China and the United States in the South China Sea, more, news of a certain virus, breaking out again. All of these things could weigh negatively on the market. But if things in earnings seasons continue to look good, that could help push the market up as well. So be very, very cautious is basically our advice right now. Of course, take your profits when you get them. That's the most important thing in a market like this, is if you've got positions in profit, don't be afraid to take those off early, because, well, no one lost money taking profits. All right, let's take a look at the breakdown here and kind of see if we can figure out what is propping the market up right now. And the energy sector definitely getting a bit of a bump this week, but more so the tech sector is really getting a bit of a move here, where before we were, looks like about, let's see, last week we're sitting right around negative 25%. Looks like we rose up almost about 4% this week on some earnings results. Real estate is starting to trend up as well. Healthcare and utilities are really just kind of sitting there. Financials are flat. And energy is kind of perking up a little bit here, though, with the slight rollover in oil, which we'll see here in a minute. It did bring the energy sector back down a bit. Energy right now, the only thing that is over the zero line. Everything else is below zero on the year, including the S&P 500, which is down approximately 17%. I talked about oil, so let's take a look at it here. Hard rejection of this 120 area over the last few weeks, and we are sitting right on the 200 simple moving average and around this 93.67 support resistance area. Right now it's support since we're on top, but we are sitting right on that 200 simple moving average as well, so that could provide quite a bit of support for oil unless we get a massive selling catalyst here. Which, is kind of interesting because the Saudis basically, from what I understand, told President Biden to shove it when he went there for his meeting, begging them to pump more oil. So it is a bit of a surprise that oil has gone down these last few days. So we're going to be keeping an eye on that for sure. But still, right in this channel here, and we have not been able to break and hold below this 93.67 and the 200 simple moving average. That has provided very strong support so far, and we'll have to see if that continues to hold or whether we get a break. One thing that has broken to the downside is definitely gold, but looky there, we bounced right off the bottom of my channel that we've had marked for, about the last year and a half, 2 years almost. So that is holding true right now. So as you can see here, from almost an entire year at this point, gold has really been channelized in this zone and has not been able to break out. But we definitely got down there this week and right down to the bottom of the channel, hit that support area, bounced off of it, and pushed up after that. Now, some of this could be, the relative strength of the dollar right now. The dollar is pushing up higher and is currently on parity with the euro. If I'm not mistaken, actually, the dollar has surpassed the euro at this point, which is the first time in history that that has happened. And it is definitely something that we're keeping an eye on because it does show kind of a bit of a shift in the strength of currencies. Taking a look at something that other people like to use as currency, that would be cryptocurrency. Bitcoin really not doing all that much here. We were consolidating for, the better part of a month, and we seem to be perking up a little bit on Bitcoin, but really nothing too exciting. We did push over the 50 moving average, and we've really just been kind of hugging it the last few days. Let me zoom in here so you can see that a bit better. We've really just been hugging on to it. And of course, Bitcoin is trading right now because it's traded 24/7, 365. We pushed over this 50 moving average, and it seems to be holding a support, but the fact that it's still crashing down really isn't helping Bitcoin at all. So, if we get another push on Bitcoin here, maybe push over the 25,000 mark, that could be an interesting development in Bitcoin, but still, just like the market, in a solid downtrend here on Bitcoin. If we look at the big picture, indicated here by this teal line that I have drawn, really, a lot of downward pressure on Bitcoin right now and cryptocurrency as a whole. It has not acted as a hedge against the market as some people theorized. And it really, honestly, is just kind of following the market at this point. The market takes a tank, Bitcoin goes with it. So we'll see if this little bitty rally here on Bitcoin continues. We can push over 25, and if we can hold over that, 30 is the next area that we're going to be keeping an eye on. But going back to securities, we did get into one this week, and let me go ahead and pull that up real quick. That would be Google, aka Alphabet. Got into Google on the 21st. So let's see here. There we are, right on the 21st, right before Google tanked, as usual happens. But of course, we did have this split here on Google on the 18th. So that was a 1-to-20 or a 20-to-1 split. So if you were holding 5 shares, you now hold 100 shares of Google. So congratulations, Google now a bit more affordable to the average person. Post-split, we haven't seen a whole lot of rally in Google like we kind of expected. Honestly, we saw this with Amazon as well. When Amazon had its large split, we kind of expected people to buy into it, and we just didn't have that happen. It really just kind of tanked after that. Let's pull up Amazon real quick. So here post-split on Amazon that happened on, let's see, the 6th of June. We're kind of expecting a push on that, and we really did not get it. Rolled over pretty hard, but found support here right around 101 and managed to bounce off of that. So if you did get into Amazon near the split, you should be pretty close to break even at this point, depending on your buy-in cost. But definitely a nice rally there. But yeah, Google kind of following the same pattern at this point. We have the split here on the 18th, excuse me, and then it just kind of sold off a bit. So holding this one long, we got in at 114.74, so down a little bit on this, but this is one that we don't have a stop loss listed on this because we're not having any problem carrying this for long term if we have to. Google, one of those top search engines, is not going anywhere and is making a pretty solid amount of earnings. Also, revenue, excuse me. Earnings here looks like it's coming up on the 26th. So that will be here just in a few days. That'll be a PM release, so keep an eye on that. That's definitely one that we're going to be watching this week. But I want to go ahead and open it up to questions. Anybody here live on the call, if you have any questions, things you want me to take a look at, want to talk about markets, anything along those lines, now is the time to go ahead and post those in. I didn't get any PMs, so if you are watching the replay and you're a member of our elite membership, of course, if you have any questions for webinar and you can't make the live call and you'd like me to answer it on the air live as we do it, please don't hesitate to shoot me a PM. Also, if you haven't done so already in our elite chat or here on the comments on YouTube, please go ahead and write the word happy birthday Riz. I know that's 3 words. It is his birthday today. I know he would really appreciate that. So if you all could do that for me, I would really appreciate it, especially for our elite members in Discord. Go ahead and post that up in there. I know he would really like that. So I see we're getting some typing here, but yeah, if you could do that in the YouTube comments as well, if you're watching this replay on YouTube, it would definitely help. And of course, if you haven't done so already, make sure you click that like and subscribe button. Definitely helps the channel grow. We're trying to reach more and more traders and get more people involved. All right, can we take a look at Apple? Of course. Apple making a solid push here. Now this, of course, if you have been paying attention to the news, there's a lot of questions about insider trading with the Speaker of the House, Nancy Pelosi's husband, buying a large position in NVIDIA on a potential chip bill coming through Congress. So I have mixed feelings about that. And by mixed feelings, I think it's highway robbery. But in any case, Apple making a nice push up here. Let's see, earnings coming up on the 28th. Again, another PM release. So aftermarket close on the 28th. That will be this week. So definitely something we want to keep an eye on here. But Apple making a nice recovery here. Very solid push and looking really, really good. If you were in this one or you have a position, would have no problem holding this. Again, Apple, very, very solid company. Get yourself that 23-cent dividend there. Pretty weak, in my opinion. I think they could offer a bit more, but hey, beggars can't be choosers. So you should be getting that X dividend here shortly after earnings seasons comes out, but or earnings report, excuse me. But Apple looking really, really solid here. Nice push. We are approaching the overbought territory, but in this market, honestly, you know, earnings is going to, you know, kind of ignore RSI, to say the least, but very, very nice run up here on Apple, really making a nice move, somewhat contrary to the market. You know, if you look back here, let's see, on the 16th of, is that June or July? That's June. Actually, yeah, we're closely following the market, but still, I mean, Apple was pretty much straight up from the 16th, whereas we've had some consolidation here. Apple just went straight for the most part. I mean, one bounce and that was it. You know, we hit the bottom here on the 16th. We came up, we came down, and after that, it's been to the moon, as the kids say. But yeah, Apple looking really, really good. If earnings are positive and, you know, guidance is there for Apple, I think that we could see more upward momentum in Apple. That would definitely help the S&P 500, to say the least, as it does hold the largest market cap there. So really, really solid place here for Apple. I would have no problem getting in. Getting in pre-earnings is always a risk, so you got to remember that. Honestly, earnings have been so much of a coin flip lately, it's hard to say what will happen. You know, even if they beat earnings, sometimes they will go down. So, you know, and then sometimes they go up. You know, it's one of those things that doesn't necessarily follow apples to apples. Get it? Again, Apple not going anywhere. Rock solid company, one of the biggest tech companies out there, actually the biggest if I'm not mistaken. And I don't think that they are going to stay down for long, even though the S&P 500 has dragged them down a bit. But really solid here. Obviously, the move has kind of happened already, but if you want to play earnings and you think that Apple will go up on earnings, getting in here fairly soon is probably a good idea. I would say check in on Monday, check in on the market, see what the direction the market is looking like, how Apple's behaving. And, I mean, of course, this 150 area is really nice if you can get in there. But, again, if you want to earnings play it and you think that it's going up for earnings, then, yeah, it may be a good time to get in here fairly soon. Let's see, the 28th. I'm not going to try and do that math on stream. Okay, that's Thursday. So that'll be Thursday after market close is when they will report. So they will be live on Friday, to say the least. But of course, Apple, one of those amazing fundamental companies that is going to be making moves and pushing the market one direction or another. Of course, you're welcome. Can we get our thoughts on Johnson & Johnson? Absolutely, you can. Really nice bounce here off the 200 simple moving average. If I'm not mistaken, their vaccine got pulled. Doesn't look like it really matters all that much. Johnson & Johnson really just kind of hanging out here, but this nice little bounce off the 200 is looking good. Looks like earnings were positive. Yeah, earnings were pretty solid on the 19th, and they sold off, of course. So this could be a decent place to get in if you believe in this. And, you know, we could definitely see a move back to 175. It's not a huge gap there, not a huge mover like something, you know, like an Eli Lilly or something along those lines. But if you wanted to get in for a shorter swing trade, you could definitely make a few dollars on this one, especially if the 200 holds. That could be definitely a nice little play. And it looks like earnings were good, revenue was good, and so it sold off. That makes sense. Like I said, guys, earnings sometimes is not a one-to-one, you know, correlation. Like, oh, earnings are good, so the stock goes up. On this one, earnings were good and they sold off pretty hard. So this could be a decent place to get in off of this earnings sell-off. I'll have to throw this one at Riz as well as a potential for a couple things. Nick wants me to look at Google again. Sure, let me pull it back up. Let me zoom her out. So, I mean, as far as it's sitting on resistance, it's fairly close. I think I see what you're talking about here. Just set it right there. I would say, honestly, with Google, more the trend right now is this. That's more what I would be looking at. This is all the way back in February of 21, so that's over a year ago as far as that's concerned. I like this uptrend a bit better. So it definitely does seem to be sitting here, especially around this 107.75 area. It does seem to have some relevance, maybe not a whole lot because we do kind of trade through it quite a bit. But I like this uptrend more that we're seeing on the teal line that I drew. That to me is a little bit more interesting. But with this huge sell-off post-split, I'm a little concerned. I'd like to see what it does on Monday. Now, of course, if you took our swing trade, you're already in. I would not recommend averaging down at this point. I think it's a little bit too risky, in my opinion, to average down even here, because if it breaks, you could be holding that position for quite some time. So if we start to see some curling upwards and you feel like averaging down, you can. But again, in this market, I don't know how comfortable I would be averaging down. With everything going on with inflation and with the GDP numbers coming out at the end of the month, I would be pretty hesitant on averaging down on anything. But it is comforting right now that it does seem to be holding this resistance line, both of them for that matter. But this break below the 50 is a bit concerning as well. So we'll have to see how it behaves over the next couple days. But yeah, there definitely does seem to be some technical resistance here, which could help. Or support, I should say, not really resistance, sitting on support. Again, obviously, if you know, everything comes through for the... No, you're worried. Don't worry about it, man. If everything comes through for the chip bill, that will help push things up. I know NVIDIA has been running up in response to that. And of course, you know, when a senator, a House of Representatives husband, you know, takes a, what was it, something between $2 to $5 million position, and that gets in the news, you have a lot of people who will follow that. So we are seeing a bit of push here on NVIDIA. Let's take a look at AMD since we're looking at chip makers. AMD kind of following suit as well, though AMD bouncing off support and kind of holding here on this 87 support area. Yeah, that's pretty much following NVIDIA if you ask me. Let's look at Micron. Micron doing about the same thing, bouncing off support here, though this did reject pretty hard off of the 50 and push down. But it looks like everything pushed down following the market the way that it did. So the last couple days, market's been pushing up, so these stocks go with it, and then market dips. Even these chip manufacturers were not immune to it. Even the mighty AMD and NVIDIA. But yeah, interesting times to say the least. And I would recommend keeping an eye on the market on Monday. We definitely will be. If you're in Elite, of course, we're going to appraise you of every situation that's happening in the news, in the markets, and of course with earnings. Earnings coming up this week are going to be interesting. We are going to see some big names, obviously, as we looked, as we're going through. It looks like Apple was reporting this week on Thursday, so that's definitely one we're going to be watching. But seeing the overall market direction and how it digests all the news over the weekend, of different things going on. Of course, the president has COVID, things of that nature. And so we'll see how the market behaves, whether that's a catalyst or not. And we'll keep you all informed if you're part of our Elite membership. I want to thank all of our Elite members who came out live this evening. I really appreciate your great questions, great tickers to talk about. I want to make sure that we keep these short and to the point because I respect your time. And I'm glad that you were here and that you made it. And I want you to go out and enjoy your weekend. That's my recommendation for everybody. Go out and enjoy your weekend. Enjoy the time with friends, family, or just away from the markets for a few days because Monday we are going to be back at it again. So, as always, we'll see you in the markets on Monday.